I said this was going to happen last week, and it's certainly looking like it is. Hot inflation numbers are coming in, if you want to call them that. But honestly, we're seeing sequential numbers come down. Inflation is still coming down month over month. It was just higher than what economists were expecting. And would you place your bets on economists or the markets? And I think that's going to be the question of the day today. So let me know in the comments below what you guys rather trust. You're going to go with the markets or you're going to go with the economists? Let me know in the bottom. But the real reason why we saw the move down in the markets late in the day today was because of this Loretta Mester. Says she's open to raising interest rates by 0.5%. And that's really what spooked the markets. That's why we saw that huge downturn towards the end of the day, based off of numbers that came in on PPI this morning that were higher than expected. Nobody should have been shocked by this, especially because of what we saw from PPI and what we saw from retail sales, and really what we saw in January's employment numbers. 517,000 jobs were added. But during the month of January, we saw some massive layoffs from some big tech companies. And I want to take you, there's a couple of things that I want to point out. Let's look at the chart first. And I want to show you guys, this is the IWM, the Russell 2000. Clearly been in a breakout since October. And then you go to the Qs, clearly been in a breakout since October. And then there's the SPY, the S&P 500 ETF, also breaking out from its downtrend. Still, even with the move down and even with the red week last week, it's still above its 50-week moving average, as well as the Qs, as well as the small cap Russell 2000. And I think this is where all the money is going to continue to be made this year, to be honest with you. This hasn't scared me. I'm not worried about what's going on with the Fed right now. And in my opinion, neither should you. When we take a look at CPI, and Tom Lee from Fundstrat put this best, he said that I'm going to place my bets with the markets. We have written about constantly since last fall. The stock market has been marching to a bull playbook since October 12th, 2022. And despite those deeming this current rise as a mere bear market rally, which is actually quite hilarious. I mean, we've heard the bears talking about a bull trap, but I've never seen a bull trap last for 5 months. Have you? I've never seen it. So I think that there's a lot to still like here. And I think that you can let everybody else worry about the markets and what the Fed's going to do. I don't see any reason why we're not going to see a 25 basis rate hike, 25 basis point rate hike later in the month. And so that to me, later next month. And so I think that to me is just going to continue to stay. There's an 80% chance that we're going to see a 25 basis point rate hike in March. And I think that stands. Let everybody worry about what's going on right here and right now. And until something changes with this chart right here, I'm going to continue to remain bullish on the market. Not to mention, we are still seeing inflation come down. This last month or two, maybe it doesn't come down at a rate in which economists are expecting, but look at bonds and look at the market. The market is telling you where we're headed. And in my opinion, it's north. Check out this video on the arguments I make as to why 2023 is going to be a big year. And you're not going to miss that video. It reinforces a lot of things that I just said today to give you some more context. So until then, I'll see you guys tomorrow at 9 a.m. Eastern time. Love you all. Have a great night.